Good morning, everyone. Oh, good afternoon, everyone. Thank you for joining us today in this week's webinar, which I'm super excited to have 𝘁𝗵𝗶𝘀 and Matthew to join us today. Today's topic is going to be around two important factors for businesses who are already in the UAE or looking to move to the UAE. One is on employment laws, and I will be talking about the corporation tax regulations that businesses will need to know. Today, we will have Q&A at the end. So if you have any questions for myself, which I'll be talking about corporation tax, or Matthew, who'll be talking about employment, you can put them in the comment section and we'll go through that at the end. This session is recorded, so you'll be able to have access to this session not only on LinkedIn, but we'll also share it on YouTube. Matthew will be sharing on his channels as well. And also, if you want to reach out to myself or Matthew, feel free to ping us a DM on LinkedIn. We're happy to get in touch. I'll first introduce myself. So my name is Rayhan. I am the co-founder of Taxstar. Taxstar is a tax technology business based in the UAE. Our first product is a corporation tax automation product, which is powered by AI. And we are here to make accountants more superhuman by allowing them to finish the tax returns in a lot quicker than what they would normally do. I'm also the founder of 𝘁𝗵𝗶𝘀 Partners, an accounting firm based in Dubai, and also the host of the 𝘁𝗵preneurs podcast. Matthew, would you like to give us an intro of yourself?
Yeah, thank you. So Matthew Weeks, Director of Growth at 𝘁𝗵𝗶𝘀. I've been operating in the employer of record, employee outsourcing, visa and payroll space for the last kind of 10 plus years. And then more recently, just shy of 4 years, I joined 𝘁𝗵𝗶𝘀 as part of the founding team. And then I have a side business, which is called Your Rewards, which is an app-based employee rewards program. So I guess we're both spinning a lot of plates, Rayhan.
I didn't know about Your Rewards, so I might check it out and see what it does. We will start off with your part of the webinar. And obviously you'd need to just let me know when you need me to move slides. Before we start, can we get a quick introduction of 𝘁𝗵𝗶𝘀 and what is employee of records? What does that mean?
Yeah, well, if you just jump to the first slide. So 𝘁𝗵𝗶𝘀 is a GCC focused tech enabled employer of record business. So GCC focused, we provide our employment solutions across the 6 GCC countries: UAE, Saudi, Qatar, Bahrain, Oman, and Kuwait. Tech enabled because we've spent the last few years developing our tech platform, which is called Workforce Pro. The purpose of that platform is that it gives our customers and their employees just far greater visibility of their employment lifecycle. So we currently support over 1,000 employees as their EOR in region. And for those of you that aren't familiar with EOR, in essence, we are the legal employer of our customers' employees. What does that mean? So we effectively manage the entire employment lifecycle on their behalf. So onboarding, these employees sit under our sponsorship on our visa. They have an employment contract with us. We take care of all of their statutory benefits, their social insurance, registrations and contributions. We process their payroll every month as per their employment contract. We provide ongoing HR administrative support to the individuals who typically won't have a HR presence in country, to provide that kind of day-to-day support. And then we make sure that when it comes to offboarding, that's managed, whether that's due to resignation or termination, we ensure that that's managed in a compliant manner. So that's kind of the EOR solution. I guess one of the main differentiators for 𝘁𝗵𝗶𝘀 in this space is we are licensed across the region to provide this solution to both international companies that are looking to plug people into region where they don't have a legal entity of their own, but also locally established businesses that are looking to outsource a population of people for whatever reason, whether they're facing issues around their own visa quota, or potentially they're looking to hire people on shorter term assignments and don't necessarily want to use their own visa quota to do that. So just to give you a flavor in terms of the experience that Auxilium brings, you have a management team with over 80 years of experience. We're currently servicing 400 plus customers. Our team, which is spread across our 4 regional offices in Dubai, Abu Dhabi, Riyadh, and Qatar, it is a team of, I think, 47 or 48 people now.
Wow, that's quite impressive. And how do you differentiate yourself from being like an outsourced HR function, or is it synonymous?
I think it's really a case of we are facilitating the ability for people to live and work compliantly in region. There are elements to, I guess, a kind of full HR outsourcing solution. You could, where something like talent acquisition might be involved or performance management might be involved. We don't currently touch on those things. We're very much the vehicle for companies to deploy people and get people up and running quickly and compliantly to live and work and operate across the Gulf.
Thank you. No, thank you. Thanks for that.
Do you want to jump to the next slide? Yeah. So I think the focus of today's conversation is very much the UAE. So some of the kind of employment compliance essentials that people need to be aware of. So every hire needs a work permit and or a residency visa in order to work compliantly, and that is typically tied to their employer. So scenarios where a work permit only may be required is if somebody has pre-existing residency through being sponsored by a spouse, or they may be a golden visa holder. As of 2021, there was a change in regulation around employment contracts, and they moved away from unlimited to limited only employment contracts. So you can now only hire people on fixed term contracts, and I'll dive into a bit more detail on that in the following slides. End of service gratuity is something that all businesses should be aware of and account for from the day that they hire somebody. It's a statutory benefit which effectively replaces social security and pensions, and employees start accruing it from their first working day. Private medical insurance is another cost that companies should very much factor when hiring people in the UAE. It's a statutory requirement under UAE labour law. And as I'm sure you can probably imagine, and many people that deal with private medical insurance in other countries, there are multiple providers offering a wide range of policies, from kind of health authority compliant policies, which are relatively basic in their nature, to far more comprehensive policies with significantly higher annual limits and far greater coverage. Salaries must be processed through the local wage protection system. And the idea behind that wage protection system is to ensure that the amounts that are being paid to the employees every month aligns with their employment contract. And then mainland companies with more than 20 employees must comply with the Emiratization initiatives. And that's all based around driving more UAE nationals, Emiratis, into the private sector.
This is really interesting, and obviously we've got a corporation tax angle to this as well. Have you had any customers or clients who you've come across and they've used your services purely to be able to be compliant with corporation tax? So, for example, you may be the owner of a business, right? But for whatever reason, you can't get a visa or can't get an employment contract through that business, but they would use your services to have that contract with that business, so then they can include their salaries onto their one of their businesses. Have you ever come across that sort of scenario before?
We have owners of businesses that we sponsor in region, but those owners of those businesses are effectively acting as the first boots on the ground in region. So we
Yeah.
facilitate their ability to, as I said earlier, to kind of live and work compliantly in the UAE, representing the UK business. But any contractual arrangement would be between the UK business and the local UAE business that they're engaging with, and then any
Yeah.
invoicing would be done between those two entities. So I hope that kind of answers your question. It kind of goes back to my earlier point around, we're very much the facilitator of the people being in region, living and working in a compliant manner. We are the legal employer. We're not in essence legalizing the activity of that UK business in region.
Yeah. Yeah. No, the reason why I ask is obviously, you know, when there's for many businesses out there, you know, the person who's the owner of the business, you know, their remuneration is the one that everyone wants to ensure that they fully comply from a corporation tax perspective, to be able to, you know, be able to utilize that against their income. And obviously, you know, sometimes your visa may be in multiple businesses, for example, right? And you have another business and you can't get a visa there, you'd have to get work permit. But I guess a quite a good way to do that is through, you know, 𝘁𝗵𝗶𝘀, where, you know, you would be the person that provides a work permit and be able to run payroll for them for that specific company. So yeah.
Yeah, they very much sit on, as I said, we are the legal employer. So on paper, that individual is an employee of 𝘁𝗵𝗶𝘀, but because of the licenses and the activities that we hold on those licenses across region, that individual can compliantly represent company A, company B, company C, whoever it might be from wherever in the world, in the country in which they've been deployed.
Yeah.
So just to kind of dive into a bit more detail around contracts, probation, termination, etc. So as I mentioned, there was a shift away from unlimited contracts to limited contracts in 2021. They actually gave, when the change came into effect, they gave everybody a 12-month window to transfer any existing employees across from unlimited to limited term contracts. Those limited term contracts, when hiring people, shouldn't exceed 3 years. They are renewable as many times as they need to be renewed. And typically, employers will hire people with a 2-year limited term or on a 2-year limited term contract to mirror their residence visa validity, which is also typically 2 years. Probation periods, maximum 6 months. You can obviously hire people on less than that, and you can waive probation entirely. So we have a lot of cases where companies may have previously employed somebody through another EOR, or potentially even employed somebody directly, and then are transferring that individual across to us. And because they've already been engaged in some capacity for X period of time, they don't necessarily want the individual to have to work a probation period again. So max 6 months, but there is complete flexibility with anything less than that. In terms of notice and termination, so statutory notice is 30 to 90 days. When it comes to termination, unlawful dismissal, when you terminate somebody and you look to offboard somebody, it's crucial that you do that the right way and you follow the right steps, because otherwise it could be deemed to be unlawful dismissal, and that can trigger compensation. So to avoid any fines, penalties, sums of money needed to be paid over and above an employee's gratuity entitlement and notice pay, it's crucial that the right steps are taken. And then redundancy isn't a defined concept in the UAE, unlike the UK. You terminate with the agreed notice period and whatever gratuity entitlement the employees accrued over the term of their employment. And I'll give you a bit more detail around kind of gratuity and how it's calculated in later slides. And then finally, with regards to restricted covenants, non-competes are enforceable, but it's been made very clear that they must be, in order for them to be enforceable, they must be reasonable. So they need to be role specific, geography specific, duration, and that duration, they typically remain enforceable for less than or up to 2 years. And then with Dubai International Financial Centre, so DIFC, and Abu Dhabi Global Markets, the standards differ and are much more aligned with UK norms. In terms of pay and benefits, so employees are typically paid a gross salary on a monthly basis, although you can hire people on day rates, weekly rates, etc. But the industry norm is a monthly salary broken down into basic salary and allowances. The allowances are typically a housing allowance and a transport allowance. Employees will receive the gross amount every month, and it's really up to them how they choose to spend that salary, whether whatever car they choose to drive, or wherever they choose to live across the UAE. But one of the main driving factors behind splitting the salary that way is your end of service gratuity is calculated based on your basic salary. So for the first 5 years, it's based on 21 days of basic salary per year. And from the 6th year onwards, that increases to 30 days basic salary per year. Although an employee accrues gratuity from day one, they only become entitled to be paid their gratuity if they complete 12 months of continuous service. So we accrue. So whenever we work with our customers, we make sure that we accrue and we invoice for gratuity on an ongoing basis from the day that employee or the start date of that employee, to ensure that we're not exposed in any manner. But in order for that employee to receive that gratuity as part of their full and final settlement, they have to complete 12 months of continuous service. And then there is a shift. For those of you that are familiar with the UAE and kind of introductions of new regulations, new laws, or a change in law, typically a DIFC is almost not a guinea pig, but they often trial these changes within DIFC, and if it works well, they then roll out those changes across the wider across mainland and potentially the free zones as well. So they are at the moment kind of trialing replacing the gratuity model with the mandatory funded savings plans. And if people want to look at that in a bit more detail, the leading one is called DEWS, DEWS. And then with regards to the wage protection system, as I mentioned earlier, in order to make sure, I think there have been cases in the past where particularly, I guess, a lower category of worker has been brought into region. There has been a promise of X salary being paid on a monthly basis, and then that promise hasn't necessarily materialized. And actually, what the individual is earning in country is significantly less than what they were recruited at from their home country. So in order to avoid that continuing to be the case, the wage protection system was introduced. I don't know the exact dates, but the whole idea behind that is that it's there to ensure that whatever is agreed in the employment contract is adhered to, and that's the amount that the employee receives at the end of every month, or however often is confirmed within that same employment contract.
Just a quick question on WPS. I know it's mainly a requirement for mainland companies. I believe DIFC has their own version as well, and DMCC you have to go through WPS. Is there any other free zones where you now have to use the WPS system, or is that it for now?
I believe that's it, but I would have to double check. I don't know off the top of my head whether any of the other free zones have implemented either WPS directly or have their own kind of equivalent of. It's something maybe there's a way of sharing that kind of post webinar in case people are interested to know. But look, I think at the end of the day, the key thing is whenever you're hiring people, there is an employment contract that governs your relationship with that individual, and whatever you've agreed by way of remuneration and package should be adhered to the letter. In terms of time off, so working time and leave, the norm is a 48-hour work week. That's the maximum. And any hours that an individual is asked to work over and above that, there are overtime rules that apply, which is in some cases 1.25 times the hourly rate. In other cases, it's 1.5 times. Annual leave is a minimum of 30 calendar days. A lot of companies operate on a working day model and typically offer north of 22 working days per annum. Sick leave, you're entitled to 90 days of sick leave per year, 15 days full pay, 30 days half pay, and the remaining 45 days unpaid. And then public holidays are federal and declared. And if people are ever asked to work a public holiday, then the 1.5 times overtime rate would apply, and potentially as an alternative, days in lieu can be offered. And then with regards to Emiratization, I think one thing, kind of one caveat to this, these are the rules right now, but the Emiratization piece has existed and been in place for a long time, but it is being governed more strictly more recently, but it is ever changing. So currently, private sector employees with over 20 staff must hire UAE nationals to meet annual targets, or potentially, if they don't adhere to that, or then they face monthly fines. So right now, companies with 20 to 49 employees, you're looking at a minimum of 2 Emirati employees by the end of this year. Companies with more than 50 employees that fall into the skilled category role, and this all relates to skilled roles, you must have 6% of your workforce be Emirati, and that 6% increases to 10% by the end of next year. So it's really a case of just trying to drive more Emiratis into the private sector with the overall aim to upskill the local population. And then just kind of, I guess, in conclusion, in essence, as the legal employer, the employer of record, we effectively take care of and are responsible for all of the elements that I just discussed. So by being the legal employer, we are allowing companies, or facilitating the ability for companies to enter markets quickly, employ people or engage people within those markets without the need, at least initially, of establishing their own legal entity. So that person can remain under our sponsorship for 12 months, 18 months, 2 years, however long a customer needs that person in region. So often companies will utilize us to test markets, develop a footprint, grow a team in region, and then 2 years down the line, 3 years down the line, it makes commercial sense for them to set up. In such cases, ideally, we remain part of that journey. We'll help that company set up locally. We potentially then transfer all of those staff across to their legal entity, so they're employed directly by that organization, but we can continue to support in a HR and payroll capacity. When those individuals sit under our sponsorship, so on our visa, we ensure that they are living and working compliantly with the local labour laws. So as I said, it's making sure that people are provided the benefits that they need to be as per the local labour law. It's making sure that they're paid accurately and on time every month as per their employment contract. If they're ever in need of employment related documentation, NOC, salary certificates, etc., as the legal employer, it's our responsibility to provide those elements. And then everything that we do effectively has this technology wrap around it. So Workforce Pro has been developed over the last few years in order to provide our customers, their employees, our internal delivery teams, just far greater visibility around that entire employment lifecycle. So when we originally set the business up, we did a huge amount of market research, and one of the the main issues that companies that were utilizing a model of this nature were experiencing was that they just couldn't get the visibility that they needed on the outsourced employees that they have employed or had employed through a third party. So there was endless back and forth over email. Okay, where's this person up to in terms of onboarding? What steps have been completed? What steps still need to be completed, etc. So the whole idea of the platform, with its automated onboarding, with its automated payroll, with its leave management, expense management, document request functionality, is that it just gives everybody that's involved in that employment solution just far greater visibility on exactly what's happening and what still needs to happen.
I guess even if you're based in the UAE, right, your services still are very much relevant, because even when you set up a company, you may not want to apply for a labor card straight away. You may not want to take on employees straight away, because the moment you take on employees, for example, and you have a labor card, if you liquidate your company later on, you've got an additional step that you need to do anyway. So if you just set up a company just for the sake of, running a business, you don't want to hire employees, but you want to have a clean exit if your business doesn't work out, then I guess having someone like 𝘁𝗵𝗶𝘀 to handle the workforce would make it a lot more easier for them if they wanted to close down their business later on down the line.
Yeah, exactly that. We've had a number of cases. I mean, there are, in order to provide the solution compliantly to locally established businesses, there are certain activities that you need to have on your trade license. In Dubai, for example, that activity is on-demand labor supply services. That's what allows us to employ people on behalf of that entity and have those people either deployed remotely or even on site working from that client's offices. So if there was ever to be an inspection, they would say, okay, that person's on an auxilium visa. What does the contract look like? Okay, we can double check. 𝘁𝗵𝗶𝘀 had the correct activity. No issue with that person being on an auxilium visa and based in that particular company's offices. So we have a lot of clients that have set up, have employed directly, and then chosen to employ, or as they grow, employ the greater population through us. We have other clients where they haven't set up at all, but want to utilize the EOR model in its purest sense. And then we also have clients that establish, but like you said, don't necessarily want to directly employ any of the support service staff. And therefore, it makes more sense. I'll just employ the total population through a third party for now. I'll familiarize myself with the region. I'll have success in the region. I'll develop that footprint. And then it makes more sense commercially to go kind of, I guess, jump in fully into hiring the entire team and the support functions directly.
Yeah, no, great. Thank you for your presentation on the employment side of of things that businesses need to be aware of. And I think it's very important to understand all of these rules, because we come across a lot of customers who they set up businesses. They've been around for quite some time. Even if they've been around for quite some time in the UAE, they still don't fully understand the labor law. Although it was changed in 2021, there are still a lot of misconceptions in the market that people are not aware of, and I think you've highlighted a lot of them. So yeah. In terms of my side of it, so I'll be talking about the corporation tax element for hiring employees and how you can deduct the right amounts. One of the things that I'll be, touching upon is, obviously I'll have a quick overview on corporation tax, and we'll go have a deep dive into the employment side of things, and we'll talk about what kind of things you need to do. Now, corporation tax was just a quick introduction, quick brief of corporation tax. It was announced back in 2022, effective for periods from 2023. Most companies have their financial year as a calendar year, which is 1st of Jan 2024 to 31st of December 2024. So most companies would have their deadline this year, which is the 30th of September, to file their first corporation tax return. Now, quick reminder, you're probably too late for this, but if you had a late payment, if you had a late registration penalty, the FTA did give you a waiver to remove the penalty if you file within 7 months, and that 7 months is this month. So you've got 2 days to file your corporation tax return if you've received a late payment penalty, a late registration penalty. A few things you need to be aware of: elections. There's a number of elections that you need to ensure that you are electing for the first time this year. Once you've selected those elections, you can't go back. So, for example, you've got your realization basis elections, you've got your small business relief elections as well. You need to make sure that those elections are selected correctly, and I would recommend that you speak to a trusted tax advisor who can help you with that process. You need to ensure that you maintain a proper accounting records under IFRS, and this means, you know, make sure that you have documentation of all of your transactions, contracts, receipts, you know, financial statements, everything that you would keep. And at Taxstyle, we are able to put all of that information into one place, so you have a single source of truth for your tax returns, and also be ready for audits as well. So with the current corporation tax returns, there are over 200 fields that you're filling in, and you are filling in quite a lot of information that the FTA can go back to you on. So not only are you entering things like elections, you're also entering information on your profit and loss and balance sheet. You're also providing breakdowns of how you calculated your tax, and you're also providing financial statements as well. So ensuring that your calculation is done correctly and diligently with the support of an advisor is very, very important, and I stress that in this webinar. Now, let's talk about employee-related costs and what are deductible for corporation tax. Now, from a very basic point of view, you know, you can only deduct expenses against your taxable income if it's wholly and exclusively for business purposes. So one of the things that a lot of small businesses have on their wages and salaries line is the owner is basically the owner, right? So the owner or the entrepreneur, they would put their salary on the recognize it as an expense. Now, there are two different types of companies, as you know. You've got an LLC and you've got a sole establishment. Now, there's debates whether sole establishment you can deduct the salary as an owner because you are the legal entity, and that can be quite problematic from that point of view. However, if you are an LLC and you're the owner and you also the manager of the business, then so long as your salary is at arm's length, then you can deduct it for corporation tax from your corporation tax liability. However, you would need to make sure you do some sort of benchmarking process to ensure that your salary is at market rate. On the corporation tax return, there is a section where you need to enter all of the connected persons transactions. So you as the owner of the business, or if you've got a family who's working on the business, these are all connected persons. And these are salaries that you would need to disclose to the FTA and provide whether they are at arm's length or not, and make an adjustment. So that's the first thing that you'd have to think about from that point of view. Obviously, if you have staff on your company, you need to make sure you've got employment contracts for all of them, and on your visa. If they're not on your visa, you need to have you need to issue them a work permit and also provide a contract as well. Now, I guess if you're not able to do that, you know, plugging in ʁ𝗁𝗵𝗀, they can do that from their side, and they're able to hire these employees and invoice you for those services as well. So I think that's quite a good option for many businesses if, you know, for whatever reason you're able to hire employees directly from your company, because if you don't have them, if you recognize them as a cost and you don't have the documentation to support it, you're not going to be able to claim back the benefits from that point of view. Now, end of service benefits. You know, with end of service benefits, there's two types of things you need to be aware of. With corporation tax, you have the ability to account on a cash basis and also on an accrued basis. Now, if you decide to account your books on a cash basis, then you're not going to be able to recognize the accrued end of service benefits. However, if you are recognizing your books on an accrued basis, then you can recognize it. So you have to be careful of what you do when you do how you're preparing your accounts for corporation tax basis. Obviously, many companies would prefer to have a cash basis accounting, because then, let's say they've got invoices that haven't been paid, then they don't recognize that income because they're recognizing the books on a cash basis. So you need to make sure that you are taking that into consideration. I think pensions is quite a big place where there are opportunities for businesses to be able to use this as a tax efficient means to manage their corporation tax. And what I mean by that is many businesses in the UAE, they don't provide pensions. Pension is actually tax deductible from your corporation tax liability, and it's something that you can help to provide an incentive for your employees, as well as be able to deduct that against your profits. So that's something that many businesses may want to look into. Recruitment costs and visa costs, so long as they're directly tied to the business activity, then you're able to deduct that. Recruitment costs should obviously be linked to someone who's joined the company. Training expenses, also relating to employee development, can be deducted for corporation tax purposes. This is something that many businesses probably don't look into, but it's something that is quite important, especially as you're looking to develop your employee and get them to learn skills that can help the business in the future. Now, with regards to employment-related allowances, this is where there's sometimes a bit of a grey area. And one of the things you have to take into consideration is, is that part of normal business for you to provide those allowances? So, for example, there is possibilities to add, school fees to packages. But again, it depends on whether they would normally get that in their normal course of business, your employees. So you have to be careful on how you recognize that as well. And then you have staff insurance and medical coverage that is also part of the employment contract that you can include. Now, there are limits to how many members of the family that you can add to it. And so you'd need to be aware of those situations to be able to deduct them from your from your corporation tax calculation as well. Now, one of the things that I would stress is, a lot of these points that you will deduct against your corporation tax liability, you need to have the correct documentation. And in some instances, they need to be broken down when you submit your tax return. So you need to make sure that you are able to keep the records with your calculation. So employment contracts, visas, receipts, invoices that goes to the company that are relating to some of the expenses that you have. And if you have any payments or any compensation that's going to the owners or any related party, and that related party could be another business that's owned by an owner or family members, for example, of the owner, then you'd need to make sure that it's at arm's length, and you need to speak to and have some sort of benchmarking to ensure that they are arm's length. So, for example, one example of a benchmarking could be that you go to a recruitment firm who can provide the salary ranges for someone like yourself. So you provide them your CV, your experience, and they will tell you, okay, in the market, this is how much you would receive in terms of salary and benefits. And that's your benchmarking process that you would do to ensure that what you earn is at arm's length.
Can I ask a quick question, Rayhan?
Yeah, go for it.
A quick question?
Yeah, of course,
Just on the recruitment costs, what constitutes recruitment costs? Because in my experience, you've got agency fees, You've got flights into country. If you're hiring somebody internationally, you've potentially got the cost of temporary housing for that first 2 to 4 weeks that somebody's in country whilst their visa is being processed before they can take out a tenancy agreement of their own. Can that all fall under recruitment costs?
So everything goes back to, is it wholly and exclusively for business purposes? So if it's wholly and exclusively for business purposes, then the answer is yes. So for example, if you got agency fees that you pay, so when you're hiring an employee, you may pay 20% of their annual salary to a recruitment consultant. So obviously that is for a specific employee that's working for you. Therefore, that would be allowable. Now, when you're flying in candidates into the country, it depends on what is a normal course of business, and is it something that is happening in a normal course of business. So, for example, if you've got someone senior coming in, and they would get that kind of treatment wherever they would be hired in the UAE, then obviously that would be part of attracting them to the UAE and to work for you, because that's part of the normal course of business. If, for example, you provide housing for them, then again, there needs to be some sort of check to ensure that housing is specifically for that employee, and no one else can use it, and it's only used for business purposes. If you provide some sort of asset or housing and there's a cloud between, can it be used for personal use, then my view would be that you wouldn't include that as part of your deductibles, because there are subjectivity in that. So, for example, in the laws, if you have a car and that car is available, in the law it specifically says if that car is available for personal use, then there are situations where you can't include that as part of your tax, deduct against your tax. So these are some of the things that you have to kind of be aware of. Obviously, speak to a tax expert to help you in that process. So yeah.
Thanks.
In terms of the current state of play, obviously a lot of businesses have tax returns that they got to submit by September. So just be aware of that. If you haven't started, you want to start as soon as possible, because it's not just calculating corporation tax, it's also making sure that you have your supporting documentation, you understand how it's calculated, you get the relevant advice that you need. And then in terms of our core features in TaxStar, we have an AI-powered tax calculator. We allow you to produce financial statements in IFRS, which is required when you submit your tax return. And we also provide document expiry reminders. So if your documents expire within 20 working days at the FTA portal, you're supposed to update them. And if you don't, you get a 5,000 dirham penalty. We allow you to do that quite easily through our system. We don't do any advisory. We don't help with the calculation. We just provide a tool to help you calculate your corporation tax. And that's the end of the webinar. Thank you very much for attending. If you have any questions, feel free to add them to the comment section. If you want to get a hold of us, obviously you can contact us directly on, send us a DM on LinkedIn. Matthew, what's the best way that our audience can get hold of you?
Yeah, either LinkedIn or my email address is matthew@auxiliumservices.com, AUXILIUM services.com.
We'll put that in the comment section.
Perfect.
Any questions? I'm not seeing any questions coming through at the moment. So I think we will wrap it up then, as we're coming to time as well. Matthew, just want to say thank you very much for joining us in this week's webinar. I think obviously you've given everyone a timely reminder of the specific things that businesses need to think about when it comes to employments, and the fact that you provide a service that a lot of businesses don't know about. I think that's quite important for businesses to know as well.
Well, thank you for having me. Really enjoyed it.
Cool. All right then. Thank you everyone for joining us. Like I said, we'll be sharing the webinar on YouTube. We'll also have it on LinkedIn Live, and we'll also share the slides if anyone needs to have a copy of them. Thank you very much.
Thanks. Take care.
Bye.